Now, AS29 means what? Provision, contingent liability and contingent asset. Okay, sir? Okay. Now, first let us understand the meaning of provision, contingent liability and contingent asset. You all know that provision should be recognized, contingent liability will not be recognized, it will be disclosed, and contingent asset will be also disclosed. Correct? But before that, accounting treatment, let us understand the meaning of provision. Provision, what is the meaning of provision? Provision is a liability. Provision is a liability, but all liabilities are not provision. Means any liability which require estimation, that become provision. Any liability which require estimation is a provision. Means any liability which do not require estimation, that is not a provision, that is a liability. And provision is a part of liability. Provision is a part of liability. Correct? Understood? So provision will be shown separately in liability side only. Provision will be shown separately in the liability side. Correct? So it means it is a liability which can be measured by substantial degree of estimation. It means to understand the meaning of provision, we should understand the meaning of liability. So what do you mean by liability? Liability means what? Present obligation arising from past event. It means present obligation arising from past event. Correct? Which will be settled through outflow of resource. Which will means what? It is a future tense. So it will be settled in future through outflow of resource. Through outflow of resource. So that become liability. So any present obligation arising from past event which requires settlement through outflow of resource, that become liability. Now what do you mean by present obligation? Present obligation means any obligation which is probable on reporting date. Any obligation which is probable on reporting date. So what do you mean by probable? Probable means simple word, chances are more than 50%. Means the chances of occurrence is more than chances of non-occurrence. Chances of occurrence is more than chances of non-occurrence. So we call it what? Probable. We call it probable. Correct? So there must be present obligation. It means all obligations are not present obligation. All obligations are not present obligation. So liability means only which obligation? Liability means only which obligation? Present obligation. Correct? So if I say possible obligation is not a liability, only which obligation? Present obligation liability. The provisions are present obligation or possible obligation? Present obligation. Means possible obligation is not a provision because it is not a liability. So what is the keyword? Keyword is which obligation? Present obligation. I hope you have understood this. And if that liability require estimation, so that liability become what? Provision. So there are how many conditions? 3 conditions. How many conditions? 3 conditions. If all these 3 conditions satisfied, then we should recognize what? Provision. We should recognize provision. So what is the first condition? There must be present obligation arising from past events. Second, outflow of resource which is required to settle the obligation is also probable. Okay, don't worry, live student, we are starting AS29 from the beginning. Okay, so provision, contingent liability and contingent asset. Okay, so what we discussed, that provision is recognized, contingent liability is not recognized, only a disclosure requirement is there, and for contingent asset also disclosure requirement is there. It will also not be recognized in our books of account. This is the accounting treatment. But we need to understand the meaning of provision, contingent liability and contingent asset. So what is the meaning of provision? Provision means a liability. Provision means is a liability which requires some estimation. Means simple word, I will say any liability which require estimation, that become provisions. Means all liabilities are not provision, but all provisions are liability. So provision will be shown in the balance sheet in the liability side. In the liability side, under liability only, it can be current liability, it can be non-current liability. That is something different, but it will be shown in the liability side only. So any liability which require estimation, that become provision. So to understand the meaning of provision, we should understand the meaning of liability. So what do you mean by liability? Liability means present obligation arising from past event. Present obligation arising from past event. One thing we have understood, that all obligations are not present obligation. So any obligation which is not a present obligation is not a liability. So if it is not a liability, it cannot be a provision. It cannot be a provision. Understood? So liability means what? Present obligation arising from past event which requires settlement through outflow of resource. Which requires settlement means it will be settled in future So settlement will be done through outflow of resource. And if that liability require estimation, then that liability become provision. If that liability require estimation, then it become provision. Simple. I hope you understood. Now, what do you mean by present obligation? Present obligation means what? Any obligation which is probable on reporting date. Any obligation which is probable on reporting date, that become present obligation. Means probable means what? Chances of occurrence is more than 50%. So whenever chances of occurrence is more than chances of non-occurrence, we call that obligation is probable on reporting date. And once the obligation is probable on reporting date, that become present obligation, and then of course it will become liability, and the liability require estimation, it become a provision. This much I hope you have understood. Any doubt? Means if I'll ask a simple question to you, ki provision for doubtful debt. You know provision for doubtful debt? Provision for doubtful debt is a liability, it is not a liability. Provision for doubtful debt is a liability, it is not a liability. It's a liability. It is a provision, it is not a provision. It is a provision, it is not a provision. Both answers are wrong. Just try to understand. When I ask a liability, liability means what? Which requires settlement through outflow of resource. You only say when you create provision for doubtful debt, whether there is any outflow of resource. Means some amount which is not recovered, it does not mean there is an outflow of resource. So provision for doubtful debt is not a liability. And if it is not a liability, it is not a provision. Understood now? I will say provision for doubtful debt is a wrong name given to the account. Traditionally, we have given some wrong name to some account, and that is followed. That we are following, but actually it is not a provision because it is not a liability. It is not a provision because it is not a liability. However, the correct terminology of provision for doubtful debt is allowance for bad and doubtful debt. The correct name is allowance, but traditional days we are saying that provision, and therefore we are also calling them provision. But that is not covered in this chapter. Why it is not covered in this chapter? Because it is not a liability only. If it is not a liability, the question of AS 29 will not arise. The question of AS 29 will not arise. Now, of course, one doubt will come. So, provision for doubtful debt will be covered where? Will be covered where? So, that is a question pending from my side. I will answer it, but not now. But provision for doubtful debt is not covered in this chapter. In this chapter, only what is covered? Liability. Liability which require estimation. Liability which require estimation. Then it become provision. So provision is covered, and provision for doubtful debt is not a liability. Understood? Have you understood this point? Yes, sir. Now, what I was saying, that if there are three conditions, if all these three conditions are satisfied, then we need to recognize provision. When I say we need to recognize provision means what? When I say we need to recognize provision means what? We need to pass journal entry for provision. We need to pass journal entry for provision. So what are the three conditions? First, there must be present obligation arising from past event. Second condition, outflow of resource which is required to settle the obligation must be probable. Must be probable. Third, a reliable estimation for the amount of obligation can be made. Means it can be measured reliably. It can be measured reliably. Means we can estimate the amount of obligation. Understood? From examination point of view, whenever they ask whether it is a provision or not provision, if the condition number 3 is silent, so we'll always assume it can be estimated. It can be estimated. Suppose the amount is not given, so always assume it can be estimated. If the question is silent, what will assume? It can be estimated. Means you need to focus on first and second condition. You need to focus on first and second condition. Normally doubt comes in first and second condition, because when I say present obligation, it means obligation must be probable. And when I say outflow resource, that must be also probable. So both require probability. Now means obligation is probable, means chances of occurrence of that event is probable. And if the chances of occurrence of that event is probable, you need to check whether the outflow is also probable. Means the whether you can avoid payment. If you can avoid payment, you can't recognize provision. But if the payment cannot be avoided, it is probable, means chances are more than 50%, then you can recognize provision. So both are probable. Your obligation must be also probable. First condition is satisfied. Then you need to also check whether the amount, means outflow resource, is also probable. If you can avoid payment, then the settlement is not required. If the settlement is not required, Why you are recognizing provision? Let me give you a simple example. Just try to understand. Ki suppose you are doing you are doing some business, and in business, of course, you will do accounting of business and taxation of that business. Correct? So you have some employee who are doing your accounting and taxation work. Suddenly what happened? Income tax act change. Abhi income tax act is changed only. So when income tax act change, so the staff required training. It means due to income tax act amendment, now what is the expenditure which is going to happen? Training expenses. Training expense is going to happen. So of course, can I say first condition is satisfied? There is a present obligation arising from past event. What is the past event? यहाँ पे amendment under income tax act. Now the question is that should we recognize provision? Why no? No. Not a liability wide. I am saying there is a present obligation arising from past event. So because can I say, just try to understand, training expenditure can be avoided by appointing some trained employee. By appointing some trained employee means, can I say, it depends upon future conduct of business. It depends upon future conduct of business whether the payment will be done or payment will not be done. So quite possible we don't require we can hire a trained employee and training is not required. A training is not required. In this case, the payment can be avoided. Payment can be avoided. The second condition is not satisfied and therefore will not recognize provision. I am saying will not recognize provision does not mean that will not disclose contingent liability. It is quite possible disclosure of contingent liability is required. Right now I am only teaching what? Provision. So will not recognize provision. Let me give you one more example. Suppose you purchase one aeroplane. You don't purchase. Suppose Air India purchase what? Aeroplane. Correct? Now for commercial business they purchase aeroplane. Now as per National Aviation Act, every aeroplane which is used for public transportation require major inspection after every 3 years. Major inspection after every 3 years. So as per Act means there is a legal obligation. There is a legal obligation once you have purchased any aeroplane, you need to do some major expenditure after how many years? 3 years. And suppose the amount of that inspection is 10 crore. 10 crore is the amount of expenditure which is going to be incurred after 3 years. Now today they purchase aeroplane, whether we should create provision? Yes. Means once again you have not understood the emotions of the questions. Emotions of the question you have not understood. Just try to understand. You need to apply these 3 conditions. I say point number 3 will be deemed to be satisfied, even though in the question it is given 10 crore. So point number 3 is satisfied. And there is a present obligation arising from past event. Yes, first condition is also satisfied. But second condition, just try to understand, before 3 years, you may discard the aeroplane. If you have discarded the aeroplane, whether inspection cost is required? Not. It means it depends upon future conduct of business. Means you can avoid payment. You can avoid payment now. When inspection cost is required, after 3 years, when you will use it, then inspection cost is required. But before 3 years, you can discard it. You can sell it. Yes or no? So it means you can avoid major inspection expenditure. Therefore second condition is not satisfied because outflow resource is not probable and therefore provision cannot be recognized. Provision cannot be recognized. This is a question of C-Inter. C-Inter exam mein this question has already been asked. Understood? Have you understood? Are bolna re. Are you able to understand? Understanding, but understanding from exam point of view is totally different. Understanding from exam point is totally different. So only you are not supposed to read AS. You need to also understand the emotions of AS. Then only you will become chartered accountant. Otherwise you remain accountant. There is a difference between accountant and chartered accountant. Accountant means BCom. Only you have done commerce bachelor degree. Chartered accountant means ICI. So there is a difference between the BCom student also know what? Accounting. And if they have done MCom, they have also done higher studies, but they are not chartered accountant. They are only accountant. They know only golden rules. But we know what? Accounting standard. We know accounting standard. This is the difference between accountant and chartered accountant. You want to become accountant or chartered accountant? It means you need to become expert in what? AS. And in CA final, when you will come, we'll do advanced AS. We'll do there is some other accounting standard. Then we'll do more advanced. We'll do IFRS also, International Accounting Standard. So it means we need to go to that stage. We need to go to that stage. So this is the beginning. This is the beginning of CA. CA foundation was not the beginning of CA. CA inter is the beginning of CA. So that importance you need to understand. Once you understood that importance, CA become easy. Once you understood the importance of AS, then only CA become easy now. So that you need to understand. Have you understood these three conditions? So can you repeat with me? There must be present obligation arising from past event. Second condition, outflow of resource which required to settle the obligation is also probable. Third condition, understood? So this point now you will be able to understand. Only those obligations which exist independently from the entity's future conduct of business should be recognized. Means any obligation which exists independently from the future conduct of business should be recognized. Means any obligation which is dependent on future conduct of business, ki what business is going to do, for that no provision will be recognized. Same example, aeroplane example, there was an obligation but that depends upon the future conduct of business, therefore we will not recognize any provision for that. Understood? Correct? Then this point, come to this point. One thing you have understood that obligation are of two types. Means already I have said in the last class that obligation are two types: contractual obligation and legal obligation. So whenever I am saying obligation, obligation may arise due to contract or obligation may arise due to act. Now whenever there is a legal obligation, so legal obligation means act. Now the question is that act is enacted or not enacted. So what AS 29 says that if act is enacted, so of course we should create a provision for that. But if act is not enacted, but there is a virtual certainty that it will be enacted soon. Now what do you mean by virtual certainty? Virtual certainty means chances are more than 95%. What do you mean by virtual certainty? Chances are more than 95%. Means it is not enacted on 31st March, but on 31st March there is a virtual certainty that it will be enacted soon. Then also we recognize what? Provision. So for act, what they are saying, if the act is already enacted on or before balance sheet date, so yes, there is a legal obligation. Recognize provision if all the three conditions are satisfied. If it is virtually certain on balance sheet date that it will be enacted, virtual certainty means chances are more than 95%. Chances are more than 95%. Then also there is a legal obligation, and if all the three conditions satisfied, we recognize provision. Correct? Means, can I say in this way, if it is neither enacted nor it is virtually certain on balance sheet date that it will be enacted, then there is no legal obligation on balance sheet date, and therefore they will not recognize provision. Got this fine? Correct? Now don't worry, from exam point of view, if they have given this, so they will use virtual certainty. This term they will use. Yes, there is a virtual certainty that act is going to be enacted. But I'll give you one simple example. Suppose you know about act enactment. The bill need to be passed in both the houses. Suppose the bill has been passed in both the houses, but till now it has not been signed by president. Till now it has not been signed by president. You all know in India president is a formality. Yes or no? Means if the bill has been signed, so can you say there is a virtual certainty that it will be signed and it will be notified in the official gazette of India. So if the bill has been passed in both the houses before balance sheet date, it means there is a virtual certainty or not. So we should not wait for what? The signing of president, because signing of president is only a formality. So in this case, we'll understand that yes, there is a virtual certainty that act will be enacted. Got this point? Chalo. Now coming to contingent liability. Contingent liability means what? It can be present obligation, it can be possible obligation. The possible obligation is what? When the chances are less than 50%. When the chances are less than 50%, or we can say when the chances of non-occurrence is more than chances of occurrence. Correct? So you have understood present obligation, you have now understood possible obligation. So any present obligation arising from past event, Sunna, any present obligation arising from past event which cannot be recognized as provision. Why? Because either of the either second condition or third condition is not satisfied. Then it will become a contingent liability. Understood? Means any present obligation arising from past event and second condition and third condition satisfied, it become what? Provision. Means there is a present obligation arising from past event, first condition satisfied, but either second condition is not satisfied, means outflow of resource is not probable, or second condition satisfied but Third condition is not satisfied, means we are not able to estimate it, then it will become what? Contingent liability. Then it become contingent liability. So can you say any present obligation from past event which cannot be recognized? Which cannot be recognized. Why? Because either outflow resource to settle the obligation is not probable or reliable estimation cannot be made. Then that present obligation will be disclosed as contingent liability, or it is a possible obligation arising from past event. All possible obligations arising from past event will be always disclosed as contingent liability. Any possible obligation, whether it can be measured, whether it cannot be measured, it will be always disclosed as contingent liability. Keyword is up to this. So if you can write down this much, you will get marks. Can you repeat with me? Contingent liability are point number A. Point number A is what? It is a present obligation arising from past event which cannot be recognized. Why? Either outflow of resource is not probable or reliable estimation cannot be made. Understood? Or it is a possible obligation arising from past event. Means the keyword is past event. Means any obligation arising from future event is not covered in this chapter. Because future event we don't recognize. Future event we don't recognize. Understood? Can we move? Correct? If you 1 minute. I will, once I stop, then I will say any doubt, then you ask, because my rhythm will lost. Okay, in between, because I am in rhythm. Rhythm, you know, it is very difficult to teach in very fast. Okay, so I am in process. Okay, now you ask. I forgot what I was saying. My rhythm lost. Bolo. Of course now. What is this question? Flight wala question, aeroplane wala question. So of course it is not a provision. So in that case, outflow is not probable. The outflow is not probable, then we can disclose it as a contingent liability. 1 second, just try to understand. Apply your own common sense. In that, there was a present obligation, but outflow is not probable. Therefore, it becomes what? Contingent liability. Now, everything is with you. Everything is given. You need to act as per AS 29. There is no if and but. What is given in AS 29 that you apply? So, what do you say? Present obligation arising from past event. In the flight wala question, first condition satisfied, but second condition was not satisfied. The outflow of resource not probable, amount can be estimated. However, even though amount cannot be estimated, then only it can be disclosed as what? Contingent liability. Means contingent liability will disclose whether it can be measured or it cannot be measured. So actually this was the next point. You stop me in between. Okay. Take it. Please. Now what I was saying. Have you understood this contingent liability, present obligation or possible obligation? This you have understood. If you want to write down this, right? If you have forgotten this, even though you are not writing, you have written your keywords. But let us read. Possible obligation arising from past event, the existence of which will be confirmed by occurrence or non-occurrence of uncertain future event which is not within the control of the entity. Can you repeat with me? Possible obligation arising from past event, the existence of which will be confirmed by occurrence or non-occurrence of uncertain future event which is not within the control of the entity. Can I say it will take only half minute to memorize, and once you have understood you can write. So I will say keyword is what? Last day he was saying focus on keyword. This is the keyword. Now can you change present obligation to any other obligation? No. So if you are not writing present obligation, 0 marks. Even though your answer is correct, they will not give marks. So present obligation, possible obligation, this become keyword. This you can't change. But if you are changing this, if you are writing this in your own words now, they will give you marks. Understood? Correct? Have you understood? Yes, sir. One thing we have understood, that recognition, it will never be recognized. Contingent liability will never be recognized. So contingent liability will not be recognized. It requires disclosure in financial statement unless outflow of resource remote. Unless outflow of resource remote. Remote means very less chances. If the outflow of resource is remote, means very less chances, so it becomes immaterial. Immaterial means what? Ignore. Immaterial means ignore. So if the outflow of resource is probable, then also contingent liability. If the outflow of resource is not probable, then also what? Contingent liability. But if the outflow of resource is remote, then no treatment. Why no treatment? Because it becomes immaterial, and AS is not applied on immaterial item. Understood? Have you understood? However, if question is silent, don't assume by your own it is immaterial. If the question is silent, then always it is material. Always it is material. Okay, sir. Okay, sir. Correct. There is one special point. What they want to say, just try to understand. I will inform you with one example. Suppose there is two companies, A Limited, B Limited, and they are in a partnership firm. Whether company can become a partner in a partnership firm? Yes, sir. Company can become a partner in partnership firm, but AS29 is also applicable to individual also. ठीक है ना? Understood? So let me, because normally they ask question of companies. ठीक है? So A Limited, B Limited. ठीक है? Now partnership firm, there was a fraud, and they need to pay a damage of 10 lakh to some other party. ठीक है? It means A and B are partner, so they are jointly and severally liable. This point you know. What does it mean? Ki A is liable for 5 lakh and B is liable for 5 lakh. So we need to create provision for 5 lakh in the books of, and we should create a provision of 5 lakh in the books of B Limited. This is provision. But can you see B will not pay? Then entire 10 lakh need to be paid by whom? A. It means for A Limited, 5 lakh is provision and 5 lakh is what? Contingent liability. Contingent liability. Similarly, in the books of B Limited, 5 lakh is what? Provision, and 5 lakh is what? Contingent liability. Understood? Till now, this type of question has not been asked. Correct now, but can be asked in multiple choice question. I am expecting this type of question with MCQs become more important. When there was no MCQs now, this type of question they don't used to ask, but now the probability has increased. So what they are saying, where an entity is jointly and severally liable for an obligation, the part of obligation that is expected to be made by other party is treated as a contingent liability. Now, whenever there is any question of provision and contingent liability, we need to think about three conditions. First is what? Obligation. Second is what? Outflow of resource. Third is estimation. Correct? Now, you need to give me answer. Don't see remark. Remark ko hide kar do. Hide remark. Hide remark. Don't see whiteboard. Don't see screen. ठीक है ना? Because I can't hide. I can't hide. So obligation, outflow resource, estimation. Any type of questions come, always think about this 3 points. First, obligation is present, outflow is probable, estimation can be made. But provision, contingent liability. Provision. First answer got. Obligation is present, outflow is not probable, and estimation may or may not be made. But the what? Contingent liability. थोड़ा confidence increasing. Confidence. Abhi there are more cases. हाँ ठीक है. Obligation is present, outflow is remote. Outflow resource remote. What? Nah. Outflow is remote, immaterial, no treatment. No disclosure means there is a treatment. When you are disclosing, it means it is a treatment. Huh? You have not recognized by disclosing. That is also an accounting treatment. Okay. So no treatment. No treatment. Ignore. Remote means what? Ignore. Once I am saying remote means ignore, because immaterial. Nothing can say. Obligation is possible. Outflow is probable. Estimation can be made, may or may not be made. Contingent liability. Understood? Then obligation is possible. Outflow is not probable. Estimation may or may not be made. Everyone saying contingent liability. I was expecting that you will give wrong answer, but your answer is correct. Means you surpass my expectation also. Means I was expecting that you will give me wrong answer, but you are giving correct answer now. So it means now confidence increased. Understood? This also correct, but you are not referring the answer now. Pakka na? Then obligation is possible. Outflow resource is remote. Ignore, no treatment. Last, obligation is remote. Ignore. Remote means what? Ignore. Confidence increase. Now the question cannot be beyond this. Question cannot be beyond this. Only you need to understand the English of the question. English you need to understand, because I am not English teacher. I am not teaching you English now. English emotions so you need to understand. But this is only the benchmark. Benchmark is this. Now coming to contingent asset. Contingent asset means what? It is a possible asset arising from past event. It is a possible asset arising from past event. The possible asset arising from past event. Once again, same thing, the existence of which will be confirmed by occurrence or non-occurrence of uncertain future event which is not within the control of entity. But what is the keyword? Possible asset arising from past event. Now, for recognition, what they say means if you are saying, if you are talking about obligation, so obligation is a liability or contingent liability. Liability may it can be either pure liability or provision, but provision is also a liability na. Provision is also a liability. Correct. For inflow means if there is an inflow, it can be either asset or contingent asset. But here they have not given any specific name to this. Means it is an asset or contingent asset. Asset or contingent asset. Understood? Now what they are saying, if inflow, listen, however till now this type of question has not been asked at CA inter level, and I also don't expect. But we need to read AS29 now. On my assumption, you can't study na. You need to study as per ICA requirement. So inflow are, if inflow are virtually certain, once again virtually certain means what? Chances are more than 95%. If it is virtually certain, so what our AS29 says, then it is not a contingent asset, it is an asset and recognized asset. Okay? So if inflow are certain, certain means asset. But if inflow are not certain but virtually certain, then also it is an asset, then recognized asset, then it shall be recognized as an asset. If it is probable, probable means chances are more than 50%, but less than now 95%, because more than 95% become what? Virtually certain. If it is probable, then don't recognize it as an asset, it will become a contingent asset and only require disclosure. So not recognized as an asset, it is a contingent asset, but disclosure will be given where? Disclosure will be given where? No, for contingent liability, disclosure is required in financial statement. When I say financial statement means notes to account, but contingent asset, disclosure is required in the report of approving authority. Report of approving authority means director's report. Report of approving authority means director's report, and director's report is not a part of financial statement. However, this is 100% bakwas, which will be corrected in CA final when we'll do some other accounting standard. This is totally bakwas. Director's report, why? Finance, we apply AS in financial statement, director's report. Financial statement, we should disclose everything where? In financial statement means notes to account. So I will say this is totally bakwas, but we need to do as per AS29. So your answer should be what? It should be disclosed in the report of approving authority. Report of approving authority. Understood? If it is not probable, then no treatment. Not probable. Not probable now include remote also. So remote means chances are less than 5%. Not probable means chances are less than 50%. Whenever chances are less than 50%, we call it not probable. Correct? So now say chances are more than 95% means what? Virtual certainty. Chances are more than 50% means what? Probable. Chances are less than 50% means what? Not probable. Chances are less than 5% means what? Remote. Understood? Yes, sir. So one summary I have given for outflow and inflow. If it is 100%, then no doubt liability and asset. If it is more than 95%, so this is also liability, but the name is given what? Provision. This will be an asset. If it is more than 50%, here it is a liability and the name is given what? Provision. But this will become what? Contingent asset. Difference you understood? It is not a contingent liability yahan par. It means we are more strict for inflow due to conservatism principle. This is nothing but conservatism. We don't anticipate income. Income means asset, possible asset. So this is nothing but conservatism principle. Okay. If it is less than 50%, this become what? Contingent liability. But here what? No treatment. If it is less than 5%, both what? No treatment, no treatment. So as summary I have given for inflow and outflow. Chalega. Then coming to measurement of provision. Now from examination point of view, only 2 points I need to say for measurement of provision. What AS29 says that whatever provision you are measuring, it should be the best estimate. Best estimate. Best estimate of what? Expenditure, which is required to be settled, correct, for the present obligation as on balance sheet date. Now, but how to estimate? That depends upon 2 points. How to? This is important. How to estimate? So what they are saying, if the obligation involve large population, if obligation involve large population, right now just try to understand. I have announced that anyone who is scored more than 90% in advanced accounting, this academy, this I am announcing, not academy, huh? So don't take it as a statement, huh? ठीक है ना? This academy will give you 50% refund. Correct? So बताओ, it is one student or large student? But it become a large student. Correct? So here obligation involve large population. Large population. Understood what I am saying? So here we don't know which student will score more than 90%. Any student can score 90%. So this obligation involve large population. Understood the meaning? So whenever obligation involve large population, then we should determine the expected value of obligation. We should determine the expected. What is the keyword? Expected value of obligation. Now expected value of obligation is nothing but weighted average of all possible outcome. Weighted average of all possible outcome. Let me take one example. This type of question can be asked in exam. Suppose during the year a sales was done with warranty. You know warranty? Warranty. Okay? And warranty has been given for 1 year. Warranty has been given for 1 year. Now, as per the expectation of management, everything is depends upon expectation here. Out of the total sales, 60% customer will come with no defect. There will be no defect. But 30% customer will come with minor defect. And 10% customer will come with major defect as per their past experience. Correct? Let's say in this current year they have sold 10,000 units. Let's say in the current year they have sold 10,000 units. Correct? Now, what will be the outflow? The outflow will be as per the expectation of management. Everything will be given in the question. Now, as per the expectation of management, here to no outflow. Here the outflow is 100 rupees. Here the outflow is 400 rupees. So what will be the expected value of obligation that we need to calculate? Very simple. Mathematics. Apply what? Average means weighted average. So what you will do? With no defect, it will be 10,000 into 60% into 0. So 0. I am just writing to explain you. It is 0 only. With minor defect, it will be 10,000 into 30% into 100. How much it is coming? 10,000 into 30% na? Into 100. Outflow is 100. How much? 3 lakh. Correct? And major defect, it is 10,000 into 10% into 400 is equal to how much? 8 lakh. So, Kiris. Now, one thing. You said 8 lakh. Have you used calculator? You have used calculator, then also wrong. No. This is not correct. Right? 8 lakh or 4 lakh? 4 lakhs. Don't. After using calculator, how can you do wrong? One mistake means it can be 6-month gap in exam, because 1 mark is very important. You can understand if in CA foundation someone has scored 199. Correct now? The 6-month gap na means any student who is scoring 39, 6-month gap. Any student is scoring 149, 6-month gap. So 1 mark is also very important in CA examination. And for that we should avoid calculation mistake. Calculation mistake is the worst mistake which a student do in exam. You know everything, then also you are doing mistake. That is worst mistake. Better is what you don't know and then do mistake. That is acceptable. Correct na? If you don't know, then you will do mistake only na. But if you know and then you are doing mistake, this is the worst mistake. Okay? So this become how much? 7 lakh is the answer. 7 lakh will be the amount of provision. This type of question will depend upon the information given in the question. Information means apply the information given in the question, only you know how to calculate weighted average. Weighted average means mathematics. So I think no practice required, only you need to understand what is the requirement of the question. So your answer will be based on the information given in the question. Chalega? Have you understood? Correct. Understood? Yes, sir. Now AS 29 says that provision will be the future expenditure but will not discount it. Means there is no need to calculate present value. Means the provision will be recognized at undiscounted amount, because this amount is payable after 1 year, after 2 years. Then also what is not required? Discounting is not required. So as per AS 29, provision is recognized at discounted amount or undiscounted amount? Undiscounted amount. So even though discount rate is given, don't use discount rate. Don't use discount rate. Chalega. Understood this fine? This is the first case. Second case, what is? From my point of view, they will ask question from this only. From my point of view, they will ask question from this only. But when there is a single obligation means to only one student, I have given what? Refund wala option. So there is only single obligation with two possible outcome. Two possible outcome means yes, no. Only there are two possible outcomes. If there are more than two possible outcomes, then always weighted average. In case of single obligation also weighted average. But if there are only two possible outcomes, suppose yes 60%, no 40%. So in that case, most likely amount will be the amount of provision. Most likely amount will be the amount of provision. So when there is a single obligation with only two possible outcomes, provision is created based on most likely outcome. However, no question of this nature has been given in ICS study material. Only this type of question has been given. Correct? Means if I say in this way, suppose, just try to understand. Suppose a high court case is pending, and as per the expert, there is 60% chance of loss and 40% chance of win. So 60% chance of loss, so we need to pay 10 lakh, and 40% chance of win means no compensation will be payable. So there are single obligation and two possible outcome. You will use most likely outcome method. So what will be the amount of provision? What will be the amount of provision? I am giving you two options. The amount of provision will be 10 lakh into 60%. The amount of provision will be 10 lakh. The amount of provision will be 10 lakh. Will not do 60%. Most likely amount will become the amount of provision. However, this type of question has not been given. But suppose if I say in this way, high court case is pending and there is a 40% chance of low damages. Means compensation you need to pay, but low compensation. 20% chance you need to pay high compensation. Correct? And 40% chance you need to pay no compensation. So single obligation but with three possible outcome. So you will apply most likely outcome method or expected value method? Expected value method. This type of question has been given in ICS study material, have been asked 2-3 times in exam. Now amount is given, suppose 10 lakh, here it is 20 lakh, and here it is nil. So what will be the provision? Provision will be what? 10 lakh into 40%, 20 lakh into 20%, and that will be 0. This will be the amount of provision. Understood? So I will say, if you know mathematics, this is depend upon the information given in the question. The information, read information and calculate it by using calculator. Okay, understood? Have you understood? Super easy. आगे चलते. So this also you have understood. One thing we have understood, that amount of provision should not be discounted to its present value. But only one exception is there. One exception already we have done under AS10. But the AS10 what we have done? DRSL. I said DRSL, there is an obligation as per AS29, and in AS10 I have said DRSL will recognize a present value or undiscounted amount. As per AS10 we created DRSL at discounted amount or undiscounted amount. Only there is one exception, means all provision will be recognized at undiscounted amount. Only one provision, that is DRSL, will be recognized at present value, discounted amount. Understood? So all provision at which amount? Discounted, undiscounted? Undiscounted amount. Only provision for DRSL. DRSL means decommission, restoration and similar liability. That will be always recognized at discounted amount. Understood? So that only one exception has given here. Chalega? Can we move? Yes, sir. Changes in provision. What they say? Changes in provision means what? Whenever you have created one provision, so we need to do reassessment of provision at each balance sheet date. We need to reassess the provision at each balance sheet date as per the current information. as per the available information. So provision may increase or decrease, or provision may no longer require. It is quite possible present obligation now become possible obligation. So it is quite possible provision become contingent liability. So you don't require provision. In that case, you should change the amount of provision. So increase in provision or decrease in provision, or provision become zero. Understood? So provision must be reviewed at each balance sheet date and any adjusted to reflect the best current estimate. If provision is no longer required, as it is not probable, amount of provision must be reversed. So any increase or decrease will be also done with profit and loss account. Any changes will be done through profit and loss account. Chalega. Use of provision. Provision should be used only for the expenditure for which it is originally created. Means suppose you created provision. Now it is no longer required. Can you use that amount of provision for any other purpose? No. Understood? The provision is no longer required. Reverse it. You can't use the amount of provision if it is no longer required for any other purpose. The provision can be used only for the purpose for which it was originally recognized. Chalega? Yes, sir. Accounting treatment, if it is related to expense, but what will be the amount of, what will be the journal entry for creating provision? PL account debit to provision, or better is it is what expense account debit to provision. Normally we say PL account debit to provision. So normally students are confused कि it is मतलब better journal entry is expense account debit to provision. Provision is a liability and expense will be transferred to PL. So we'll say expense which is transferred to PL to provision. Understood? And for recognition of interest expense, can I say on that we need to, अच्छा this you ignore, छोड़ दो. Interest expense will never they will ask. This you ignore only. This you ignore, okay. This was actually for this point, but ignore. They will never ask at CA interlevel. Cut do na. Delete it. For reversal of provision, what will be journal entry? Reverse entry. Provision account debit to related expenses. Can you say if related, if it is related to acquisition or construction of asset, means can I say we are discussing about AS10, DRSL. Then what will be journal entry? PP account debit to provision. PP account debit to provision. And if it is reverse, then provision account debit to PP. You remember decrease in provision. So we said adjust with the cost price of asset only. So it is provision account debit to PP. This we have already discussed under AS10. Okay, sir. Okay. Now there are 4 points for which question can be asked. One is future operating loss. Let me give you one example. Suppose there are 2 factories, we have 2 factories. One factory is profit making, another factory is loss making. This is one company is only one, but having 2 factories. One factory is loss making, and because this factory is a loss making, we have decided to close down it. We have decided to close down. So current year loss is 10 crore, but future loss, because can you say even though we have decided to close down, but it will take time to close down now. It may take another 2 years to close down. We have decided to close down, but we have not yet closed down. So we are expecting that in the next 2 years, before actual closure, our expected loss will be 20 lakh. Understood? This 10 lakh current year loss will be recognized. So we are not discussing about current year loss. Should we create provision for future operating loss? Yes or no? Should we create provision for future operating loss? Yes or no? How many are saying no? How many are saying yes? How many are saying no? Why you are saying no? Yes, can you say this loss depends upon future business, future event. Business is not yet done. This is only an expected loss arising from future event now. If it is arising from future event, this is outside the scope of this chapter. Will not recognize it. So neither provision nor contingent liability, because this chapter is for past event, not for future event. Therefore, future operating loss, no provision will be recognized. Understood? This type of question can be asked. Understood is fine. Provision should not be recognized for future operating losses. Then coming to next point, this is a reimbursement. Reimbursement means what? Suppose provision is recognized and you have created provision because all the 3 conditions has been satisfied. Provision you have understood and you have created a provision of 10 lakh. Correct? Now this amount of expenditure for which you have created provision can be reimbursed by third party. The third party can be director, third party can be any other company, third party can be insurance company. So it is quite possible expenditure for which provision has been recognized that might be reimbursed by third party. So if it is reimbursed by third party, first question arises, should we recognize provision? Yes or no? The provision should be recognized. Now the question is that if there is a reimbursement, so it means there is a possible inflow. So should we recognize asset for that? Understood what I am saying? One second, try to understand. The provision amount, provision you have recognized, but the amount of expenditure for which you have recognized provision can be will be reimbursed by third party. The third party can be any party. So if I am saying reimbursement, so there is a inflow, possible inflow. So should we recognize an asset for that possible inflow? Yes or no? Yes. When? When there is a virtual certainty. As we have done for possible inflow, we discuss in contingent asset. If the possible inflow is virtually certain, then it is not a contingent asset, it is an asset. The same thing, if the reimbursement is virtually certain, then recognize reimbursement as a separate asset. Separate asset means separate asset in the balance sheet. Means provision will be a separate liability, asset will be a separate asset. Understood? And such amount is set off against provision and net amount will be shown in PL as an expense. Means in balance sheet, separate liability, separate asset. But in SOPL, net amount will be shown as an expense. And the reimbursement asset should not exceed the amount of provision. Means whatever reimbursement asset you are creating, that should not exceed the amount of provision. Understood these 3 points? Recognize reimbursement as a separate asset. Such amount is set off against provision and net amount is shown in PL. Amount recognized as a reimbursed asset should not exceed the amount of provision. Means of a provision you have created 10 lakh. Okay. And reimbursement asset you want to create 10 lakh. Whether possible? Yes, this is possible. 9 lakh? Possible. 11 lakh? Not possible. In this case, the reimbursement asset cannot exceed 10 lakh. Chalega? Yes, sir. I think only one time this type of question have been asked. I think what I understand. 1 or 2 times, not more than that. But have been asked at C enter. Okay. If it is not virtually certain, then can I say it will not be recognized as an asset? If it is probable, then disclose as a contingent asset. Now, not probable, then no treatment. Understood? Can we move? Can we move? Yes, sir. Then coming to executory contract. What do you mean by executory contract? Executory contract is those contract which is neither performed by both party or performed by the both party to an equal extent. To an equal extent. Means both party has performed 40% of their obligation. Then also it is executory contract for the 60%. Okay. Let me take one example. Suppose A Limited, B Limited, they have done one contract. To purchase a machinery for rupees 10 lakh after 5 years. After 2 years. 10 lakh. Means B will deliver the machinery after how many years? And A will pay after how many years? Of course, on delivery only, na? Correct? Understood what I am saying? So, it is an executory contract or not? Because both party has not performed their part of obligation. Understood? So, this become an executory contract. Now, the question is that for A Limited, should we recognize the liability? Because they have done one contract, and as per contract they need to pay what? 10 lakh. After how many years? 2 years. So should we create a liability for A Limited? Yes or no? How many are saying no? How many are saying yes? Achha, those you are saying no, why? That is correct. देखो just try, you need to answer as per the requirement of AS 29. Your answer might be correct but not as per ICAR requirement, 0 marks. Your answer is also correct but revoke, this is bakwas. This is a future event or past event. So this liability, this obligation will arise but due to future event. Once the machinery is delivered, then only the obligation will arise now. If the machinery is not delivered, so what is the keyword? This is based on future event and therefore AS 29 is not applicable only. Once again, keyword. Your answer might be correct but not as per ICAR requirement, means not as per AS 29. So I will not give marks because I am a CA and you are going to become CA. Your paper is checked by whom? CA. And which CA who have taken 5-6 attempts? So they will not give free marks. Who is checking your paper? You know who is checking your paper? Who have already taken 5-6 attempts to become CA. So they will give free marks. They will never give you free marks. Tit for tat. बदला लेगा ना, बदला. Yes or बोलना नहीं. This is human psychology. Just try to understand it. They are not wrong. They have taken multiple attempts. So whether you are expecting any free marks, don't expect free marks. Don't expect free marks. And this is a fact. But if you are writing correct, they will give full marks. Are you able to understand? Correct. So keyword, I have already said this chapter is based on past event, but it's a future event, and therefore AS 29 is not applicable to executory contract. Now I'll change the question. I will change the question. Listen, what happened? After 6 months, what was the contract period? 2 years. But after 6 months, A Limited has changed the production process. And now they don't require the machinery. Correct? Now the question is that whether A can cancel the contract. देखो, just try to understand, any contract cannot be cancelled. It can be cancelled only upon payment of penalty because it is enforceable in the eyes of law. If you are saying cancel, it means it is not enforceable. If it is not enforceable, it is not a contract. You have done contract act now. If you are saying it can be cancelled, it is not enforceable. If it is not enforceable, it is not a contract only. So if I am saying contract is enforceable. So it means any contract which can be cancelled upon payment of penalty is actually non-cancelable contract. It is a non-cancelable contract which can be cancelled only upon payment of penalty. So if they don't require what? Machinery, whether they can cancel? No. They can cancel only upon payment of penalty. It means, can I say, if they can't cancel, can I say this contract become burden for him? Or if they need to pay penalty, then also it is a burden. So what our AS 29 says that if this is the case, the contract become onerous. Contract become onerous. So what is the onerous contract? Any executory contract in which the cost of fulfilling the obligation is more than the expected benefit from that contract. Cost of fulfilling the contract is more than the expected benefit, that become burden. So can you say now this contract become headache, they become burden, it become an onerous contract. And once the contract become onerous, AS 29 is applicable. Once the contract become onerous, AS 29 is applicable. We should recognize the provision, and the amount of provision will be lower of cost of fulfilling the contract or penalty to exit from the contract, whichever is lower. Suppose the cost of fulfilling is 10 lakh and penalty is 2 lakh. So of course they will exit now. They will exit. So we'll take lower and we'll create a provision of 2 lakh. We'll create a provision of 2 lakh. Understood? Have you understood? So this only is given. I think this type of question can be asked in exam. An onerous contract is a contract in which unavoidable cost of meeting the obligation under the contract exceed the economic benefit expected to receive under it. In this case, the amount of provision will be unavoidable cost, which is lower of this and this. Means cost of fulfilling the obligation and any compensation or penalty arising from failure to fulfill it. Out? Understood. Restructuring, till now they have not asked any question. This you can leave it. It is not so much important for CA inter examination. Scope you can read, disclosure you can read. chapter is over. Understood? Correct? I'm coming to you. What is your doubt? बोलो बोलो, I am listening. हाँ, what? We are creating a provision for now we are you will need to reverse that provision option. If we reverse देखो, that is beyond a CA enter, they will never ask that type of question. It will take full explanation. Okay, so I don't want to go to that. You are saying reversal. First, they will not ask reversal of that case. I think AS10 we were done. So I said this is not expected in exam. Already I have said, but I have given the treatment. So normally what happened? You want the explanation? Okay, sure. Okay, but good question. This type of doubt is coming means excellent. Super. देखो, I have limited time. If I'll teach everything, then you need to come to my regular class. Then प्यार से means 180 hours I take for CA inter. So 180 hours is something different, na? Then I will teach everything from top to bottom, everything. But right now I am just concentrating on those areas where highly expected question will come. Also those areas from which question may come, even though not yet asked. That also I am teaching. But I know the area from which question will never come. So I am leaving. Okay. Of course, that I need to do. Otherwise, so it will take a lot of time. ठीक है, चलो. Now AS29, now all the questions you can do by your own because that is based on the information. So AS29 I am not taking any question. So will you do all questions today only? Today you do. ठीक है. From my point of view, now you will be able to do all the questions. Once you have understood, now your answer is based on the question information. If you understood the content, now you can do any questions. Chalega. One question, if you, let's see how many of you are able to do it. Do these questions right now. Have you done this question before? Not done now. But this question have been asked 2 times in exam CA enter. Can you do? I'm explaining what they are saying. There are 20 cases pending. How many cases? For the 5 cases, what is the chance of win? Batao. Whether any provision is required, any contingent liability required, ignore. Correct? You have 100% win. In the next 10 cases, win is what? Low damages is what? High damages is what? Batao. It will be provision or contingent liability? Means it is a present obligation or possible obligation. What is the chances of loss? Loss is 40%. So, and win is 60%. So it is more than 50%, less than 50%? Less than 50%. Provision, contingent liability. So here we will create a contingent liability. Understood? Correct? What amount? Of course, you can now calculate. Remaining 5 cases, win is what? Loss is what? High damage loss is what? It becomes 50:50. Now 50:50 doubt will come whether it is a present or possible. Now if you read the definition, probable means chances are more than 50%. It means, can say, if I am saying not probable, it means it is 50% and less than 50%. Correct? So as per that definition, can you say here also contingent liability? Here also contingent liability. Understood? Now we should create the amount. Amount will be what? 120 lakh. Ka 30% how much? 36,000. And 2 lakh ka 10%. Total become for how many cases? For 10 cases. So multiply by 10. It becomes 5 lakh 60,000. Then here 30% 1 lakh how much? 20%, 2,10,000, how much? So total become, for how many cases? Multiply by 5. How much? So what is the amount of contingent liability? 11 lakh, 9,20,000. This becomes the amount of contingent liability. You can see the amount of contingent liability, how much given? 9,20,000. Easy now. Once you have understood, easy or not? Calculation mistake you should avoid. Understood? Suppose they have given the same question, they have reversed it. It is more than 50%. This is also more than 50%. Then it will be a provision amount. But entire calculation will remain same. But now it will not be a contingent liability. It will be provisions. Understood? Correct. Same question can be asked for provision also.